Hi, this is Alex Sutherland, VP of Strategy here at CRM Science, and with Eric Hermans, our financial services strategist. And we want to talk today about some of the primary challenges that the consumer mortgage lending industry faces with technology and serving their customers. So, Eric, what, with your experience in the industry, what have you seen are the primary challenges that mortgage lenders face in serving their customers?
Sure. I think lending executives around the country feel crippled by the technologies that they're using. If you look at the history of the loan origination systems, they were built for the back office, so they handled processor and underwriter needs. But that goes far from addressing the needs today, where we need to work in an environment of connected systems, connecting people, and putting better process controls in place. So I'm really excited about the lending cloud accelerators because it's really based on a customer-centric experience as opposed to a back office experience.
That's great. So could you tell us more about what's a scenario that would play out that would help people understand the challenges and the solutions that a connected system could provide?
Sure. Let's envision a modern lending community, and I'll set up a story that kind of happens thousands of times around the country every day. There's a hardworking realtor. She has 2 clients that she takes out on a Friday afternoon. They find the perfect home. They learn there's 2 other offers coming in. Time is of the essence. And the home buyers need a pre-qualification for $10,000 more than they already got. So in today's world, they'll typically pick up the telephone, try and establish contact with their loan originator. If he's at the beach for the weekend, they're sort of out of luck. So imagine how it could be in Salesforce with the lending cloud. The realtor could take out their cell phone, send a text message invite to the lending community, to the home buyer. The home buyer could authorize credit reports, self-service themselves and increase the loan amount that they want to be pre-qualified for, allow access to the realtor to get the instant automated pre-qualification, and a half an hour later the realtor could be putting in an offer with an attached pre-qualification. So I think it's just really powerful to start thinking about how people could work together and connect better if they're empowered in the same system.
Yeah, that is really compelling to move at the speed of the marketplace and to allow people who are already face-to-face or talking to each other in real time to have the systems keep up with that and to solve those problems and help them to get what they need in order to move deals forward. So, and I've had personal experience with this in searching and purchasing a home, and we had that disconnected experience of having to go through a very paper-based application process and providing documents and waiting for things to happen, waiting for people to process documents and so on, and then late in the process, a problem was discovered as documents were processed and things were discovered and researched, and it ended up delaying the deal and causing problems for everybody because closing dates had to slip and additional discovery had to be done, and there was a lot of phone calls and miscommunication and emails and things. What could a modern connected solution like this do to help mitigate those problems and keep deals on a timeline or perhaps even move faster?
Sure. Well, I've got a couple examples. A loan file today typically gathers about 500 documents through the process of application to closing. And when you start thinking about all those documents that need to be gathered, they come from many different providers. They could be coming from the realtor, the homeowner's insurance company, the title company, the CPA, the employer, the bank, you name it. So in today's environment, a lot of times what we see is a process where the documents eventually go to an underwriter. The underwriter discovers some kind of deficiency or needs an update or a correction, and we start going whisper down the line. So The underwriter says to the processor, I need XYZ. The processor says to the loan officer says to the borrower says to the CPA, and then in return, the messaging is a little bit off, details are missed, and documents get passed all the way back up. It's a very difficult process, and it's frustrating for everybody involved. So imagine a lending community where conditions go straight to the borrower, and the borrower has the ability to delegate those conditions to the actual source document provider. So in my scenario, if I need a letter from a CPA, I could type in my CPA's email address and contact information. They'd get the request directly and be able to upload straight to an underwriter. If the underwriter needs a correction on the verbiage or the date or a missing signature, they could communicate directly back to the CPA. It cuts multiple people out of the process. It's much more efficient. And I think it makes a lot of the pain of getting all those documents kind of go away from the process. There's another thing that often happens today. The loan origination systems were built back in the 1990s, and they've had lots of patches and band-aids put on them over time. But they haven't really addressed today's complex needs and workflow needs to deliver a better customer experience. One example of that would be single workflows. I hear from borrower after borrower that they provided a bank statement. They thought everything was taken care of. They packed up all their filing cabinets to get ready for the move. And 3 days later, or 2 weeks into the process, they hear that there's something missing. Page 3 of 3 on April's bank statement. And of course, everything's packed up. So what often happens with this kind of single workflow that's driven by milestones in the loan origination process is things don't get responded to in a timely fashion. So maybe the borrower gives bank statements, but the processor is waiting for an appraisal to come in for 2 weeks. And it's not until everything's gathered that they actually submit to underwriting. Well, that causes lots of headaches. By using a modern platform like Salesforce, it's very easy to implement parallel workflows. So the bank statement can be reviewed and responded to on its own work stream. The appraisal can follow its own work stream. And all these different work streams can kind of come together to converge on a closing.
That makes a lot of sense. What are the limitations and the legacy constraints that the existing loan origination systems are wrestling with that prevent them providing this kind of connected customer experience?
I'd probably highlight 2 things in particular. If you understand the history of the loan origination systems, they were originally built as form preparation engines. So if you imagine that a loan amount is on 4 or 5 different forms, many of these systems have the loan amount in the system many different times. It could be on the loan registration request, it could be on the uniform residential loan application, on the loan estimate, on the closing disclosure. And because they weren't built in modern relational databases, you end up with referential data integrity problems. As an afterthought, they started building trigger rules for administrators to try and connect all the different moving parts, but that's does not go far enough to address the problem. But probably the biggest issue is the fact that they're closed systems. And I might turn that on you because we've seen in the history of technology, open systems versus closed systems repeat itself over and over. Loan origination systems today generally have some integrations, but they don't have open APIs, and they're not accessible to connect to other systems. What are your thoughts about open versus closed systems and the power of Salesforce being an open platform?
Yeah, that's a great point. The Salesforce platform, by its nature, because of its public multi-tenant cloud architecture, from the very early days of the Salesforce platform, it provided an open API, well documented, that anyone could connect to. There were no constraints. There were no limitations. If you were a subscriber of Salesforce, that API was available to you to connect from any system that could talk to the internet. But what powered that was the open object model that anyone could configure and customize and make connections and relationships between the data and provide that data to the end users to export if they needed to, but connect other systems into, and also automate process around that data. And it's given end users, people who can work with Excel, can learn how to customize Salesforce and connect it to other systems, share with other users, and share most importantly with the customers. Now with Community Cloud and other features and products from Salesforce that bring the customer into the process, bring the customer into and share their own data with them so that they can see it, they can interact with it, and they can participate in the process of serving them as a customer. And so that's a key advantage that enables Salesforce customers and service providers like us to move much faster and to build a more collaborative environment around the customer and around their data, and help them get a much richer, more fulfilling experience as a customer, because it's open and they're included in the process and the data is at the center of it, and therefore it's clean and it's accessible to everyone.
Yeah, and in the mortgage industry, I think foundationally, Salesforce, it's very different. And when you think about this open system architecture, in the last 10 years, we've seen lots of innovations in the mortgage industry and new emerging technologies. For example, there's automated bank account information retrieval. But unless there's an integration in a loan origination system, you can't get at that information. And if there's not a database, then you're never going to be able to process automated rules and look for things like large deposits that could be reacted to right away. So in an open environment, I think these new emerging technologies are much more within reach. To prove my point, you have to think about something as simple as the mobile phone. Companies that built their architecture on Salesforce had mobile apps years and years ago. In the mortgage industry, we're just starting to see loan origination software betas for mobile come out. And so I think that closed mentality has really hurt the mortgage industry in terms of its ability to innovate or make use of new innovations.
Yeah, that's really fascinating. Well, thank you, Eric, for sharing those insights, and thanks for watching our conversation about this, and we'll be sharing more information soon about the solutions that we're developing to serve the mortgage industry and consumers that are shopping for mortgages. So,
Great.
thanks
For having the chat.